Malone here. Come on, wait a minute. Couldn't quite go live there. I have to remove Facebook. Okay. Coming to you live on Dallas trading floor. A little bit of equipment thing. We're trying to put in our new equipment here, and boy, oh boy, I have not the greatest in terms of the technical here, but anyways, here we go. Boy, the markets are starting to be strange. I mean, we've got higher jobless claims, record inflation, and the stocks are selling off. Are we going to slip back into? Are we going to slip back into a pullback? Who knows? But for right now, let's get into some of those slides. We're still in a uptrend under pressure, so we haven't moved. We haven't moved down, but we haven't moved up. So we're kind of sideways. So it's a very tough market to trade. I've just been kind of sitting put. I've not had anything that has been. I haven't been stopped out of anything. But again, I'm not making a lot of progress out there, and I kind of want to show you what I've got. These are currently what I have in the long. These are my long positions, and right now, Williams Company, that's down. Google, that's down significantly. I'm kind of holding on to it. I'll see. I may be burned on that one, but I do think long term with the 20-for-1 split, I hope it's going to move up. At least that's been that's sort of the that's sort of the game. That's sort of the game plan here. But tough one to trade. Matter of fact, let's just kind of run over to Google to see kind of. Well, it's actually Alphabet. That's the name, of course, of it. But let's sort of look at Google. GOOG, of course, is the symbol. GOGL, and that is the A shares. Boy, they really took a dump, but after hours, it's coming back. So it seems as if, and I just want to point this out on the chart. We did have this downward motion, I wasn't stopped out only because I put in some stocks. We look like we're coming back after hours a little bit, not a lot. I mean, we went all the way down to 26.50 and then bounced. So hopefully I'm not totally all wet. We're below the 200-day moving line average, which is not a place we want to be. But hey, it's it is the way it is. Also, of course, I'm in Matador. That was down today, but just slightly. Let's take a look at Matador here. Once I get my cursor, there we go. MTDR, of course, MTDR. This is one of my holdings as well. Matador, it seems to be holding at the 21-day line. Who knows? I mean, let's take a look at the chart here. It seems to be holding at the 21-day line. And I just want to kind of look at the 15-minute chart to kind of see how it traded towards the end. Yeah, we're getting a little bit of support right here at about 43. So I do like this stock. I do like the area that it's in. Let me just kind of check on everything. It's still got a 100% checklist. It's in the oil and gas area, which has been a very good area. And on the technicals, and that's really what we're looking at, we're below the 10-day line. Actually, if you're looking to get into this stock, and I don't really, in this market, it's very tough to get into anything. But if you're looking to get into this stock, this would not necessarily be a bad place. It's a pullback below the 10-day line, but we're above the 200, the 50, and the 21. So that indeed is looking somewhat better. Also, I have Cheniere. This is the symbol on this was LNG. This is a natural gas stock, and what they do is they liquefy natural gas. And with all the saber rattling in Europe, this one might be somewhat of a safe haven. It's up after hours, not a lot, only 62 cents, but it was up today. A very nice. A very almost 1%, but the volume is picking up in this one. So this one also, even though we're a little bit down on the after hours, again we fell below that 200-day line. This one is showing strength. Checklist on this one 78. Of course, it's in a very key area. And of course, that key area is the oil and gas area. And it seems to be one of the few areas that's holding up with all of this tension going on everywhere in, everything. So now the another one that I'm in is Nutrien. That kind of fell, well, no, it did. It went up today. Nutrien, this is the fertilizer stock. Not very exciting. NTR, of course, is the symbol on that one. But this is interesting because fertilizer is made from natural gas, and therefore they're going to have some pricing power. I mean, people are going to have to buy their products. It's up a little bit, right below the buy point. The buy point on this one is 77.35 on a consolidation base. This would be a third stage consolidation base. So it's just kind of stair-stepping up here. Hasn't really done anything wrong. Relative strength 95. If you want to be invested, this is not a bad one. 100% checklist. Now, most everything else in the market is doing terrible, but this one not so much. It seems to be doing fairly well, and it's called Nutrien, and of course, it is a fertilizer stock. Next on the list is AMD. This one fell hard today. Let's take a look at the AMD chart. I still like this chart. I still like this company a lot, but it came right down to the 200-day line, and that's just been tough. I mean, one of my all-time favorites, NVIDIA, has been practically unbuyable because of its weakness. Now, hopefully, we're going to see some strength. I bought a full position in AMD on excellent earnings, and then we fell. My full position I got in at 116. We're at 112, so we're $4 below. I do have a stop loss on this one. I don't think it was triggered, but I'm going to have to take a look. Still, excellent checklist here. 89, not bad. Just a tough market to trade all over, really. I mean, just a very difficult market to trade in general. So that's AMD. And the last one is Airbnb. I bought this one yesterday, thinking that, we're starting to see some strength in the travel and leisure, but it was off today too. Almost 2% for Airbnb. Kind of show you the chart there. My entry on this one, it was okay. Let's see, did I mark the chart? Yep, there I did. I marked the chart. Basically, I bought a half position at 203. So I'm down significantly on Airbnb, but I do like the stock. And I may have to get rid of it. I don't know, in this market. Now, let's see. Let's move on here to this is my. Just wanted to kind of put this out there. I do have several option plays. I have 1, 2, 3, 4, 5, 6 option plays. 2 of them are doing very well, and the other ones, not so much. Let's look at them. Just wanted to show you, first of all, Zoom. We're up on Zoom. As you can see, it continues to fall. This is a bear trade, and currently, the current price is at 129, and so this one has been somewhat. So let's see exactly what okay. Then we have Workday. This one is looking very good. We're up 341 on this one, and it just continues to get better. This is also a bear trade. On the first. On Union Pacific, this is the one we just put out. We're down on this one a little bit too, unfortunately. We'll see. We may be adjusting this one. Teladoc, which is, I don't know if you've been with me for a while, but this one is starting to improve. This was really out of whack, and it has started to come back in. As the market has weakened, this trade is looking better. This is a bear trade, and I didn't close it. I'll kind of go over to the chart here for that. But it continues to move lower. If this thing moves below about 65, we're going to be in the money here. But it was moving up, and now it's starting to reverse course and move down. So this one actually, even though it's negative, is looking much, much better. Okay, so the next one, this is the one that I had to adjust. This was the Iron Condor that I had on Netflix. I'm down $325, but it is starting to trend in the right direction. And I want to show you that right now. NFLX is the symbol. This is an iron condor. This is typically a trade that you use when there's a lot of volatility in the market. And boy, there's been a lot of volatility in the market. As you can see, it is trending lower, and this one should come into the profit zone. You see, we're just right in. We're still in the red, but we have a ways to go. We adjusted this one down and out, so we have until January in this one. So we have a lot of time. I do think, unfortunately, for everybody that's a long-term holder on this one, I do think we're moving lower on Netflix. But just show you how the trade is stacking up there. All right, next, and this is probably one of the last ones. This one is on Rio. This is Rio Tinto, and I did have a bullish trade on this one, thinking that the commodities are starting to look better. I am still fairly confident on this one, based on the chart. As you can see, this is the stock chart. We are in an upward trend on this one, so hopefully we've pulled back to the 21-day line, and hopefully we're going to move higher on that one. So. And then last but not least is, nope, we did Netflix. Let's see. Okay, Rio Tinto. And then Workday. This is also this is also iron condor. And the thing about these iron condors are they give you protection on above and below. This is as you can, we've adjusted it. You can see that it's moving into the green zone, which would be a good trade. But it is in a downward trend. I do think we're going to see some more weakness in this stock, and then as it weakens, it probably will become a better trade for us. But right now, we're just basically break even on this one, basically at about $10. If we were close this right now, it would be about a $10 loss. Not bad, but considering the market. Anyways, wanted to also indicate to you we do have this. You can take a look at the bull call. You can take a look at the slide deck for the bull call spread. Really easy to get your hands on it. Just go to this address, https://bit.ly/DTF0079. So that is where that's going. So we want to get to all of the questions. So thanks for holding there. Appreciate it. And let's take a look at some of the first questions. Thank you, Samuel. Always first. Tesla is falling hard. Where do you see the next support? Boy, that's a great question. Let's kind of take a look at Tesla, TSLA, and let's see where the next support would be on this one. Wow, you know what? I see it at the 200-day line. Let me pull this up for you, and let's just kind of analyze this one. Boy, this is on the daily chart here. I am looking really at support at approximately the 200-day line. I know that's kind of not good, but that's where I see support right there. And let's take a look at the technicals on this one. And right now, we're about 5.8% above the support on Tesla. That's really the next support that I see is the 200-day moving average. Hopefully it won't move beyond that. If it does, we're going to be in a bear market anyways. We're not in a bear market now, but I think maybe by tomorrow, depending on the indexes, and I want to take a look at those, we could be there very, very quickly. So let's see. Let's move back to some of the indexes. I want to take a look at the first of all, I want to take a look at the Nasdaq Composite. That one has been as of late, many of the stocks that have been holding up this Nasdaq Composite have been the mega cap techs, and when the mega cap techs have started to fade, that's really when we've been having most of the issues related to the market. As you can see, obviously we pulled down below that 200-day line, and then we bounced, and then we've moved back up, but we pulled back again today, and it looks as if I have to say, and this is not a good thing, but it looks as if we are almost officially in a downward trend. Look at this. We have the beginnings of what they call a death cross here on the Nasdaq, and of course, that's not what we want to see. If this line crosses the 200-day, then we're going to see some continued weakness. So I do think that we're going to have to be, we're going to probably pull back down again, and it doesn't look as strong as it's been. So, kind of a tough market to trade all the way around. Absolutely, very tough market to trade. All right, let's take some questions from TikTok. Thank you so much. Favorite chart right now, DISCA. Let's look at that. That's interesting. DISCA. Let's look at that chart, everybody. And by the way, if you're on TikTok, super easy for the charts. Just go to my profile and click on the link click on the link for YouTube. You'll be able to see them all. Hopefully, we're going to have shortly the capability to do all these charts, but right now, not so much. Not so much. So let's look at DISCA and see if we can. DISCA. Let's take a look at Discovery. Is Discovery discovering? I don't know. But I tell you what, it is just above that 200-day line. So I don't know if I'd be too excited about Discovery. The checklist is sort of weak. I like Discovery. I definitely like I like the Discovery channel. That's for sure. But it just doesn't look good. But it is. The moving averages are decent. Everything, we're correctly aligned here with on the index lines, but we are very, very weak. We're just barely above the 200-day moving average. Let's look at the 15-minute chart to see. Yeah, it seems to have some support right about 28, and that's where it seems to be getting some support. So here's what I would recommend on Discovery if you're in the chart. It's looking like it's trying to rally higher, but it's coming under a lot of resistance. So I probably would not sell it at this time, but I tell you what, if I was down more than 7%, I would start moving out of this, because so really the most important thing with Discovery is not a bad stock, trying to make a rally, but still in a downward trend. So if you're down more than 7%, consider maybe paring back your position, or possibly getting out altogether. I would, if you were down more than 7%, I'd probably sell at least half, just based on what I'm seeing in the chart. So that said, it's a tough market all the way around. So it's a good stock, but this market's very tough. Roku has a 77% ratio. Okay, what does that mean? Well, here's the thing. Before the inflation worries were paramount here, having a 77 a PE ratio was not a bad thing, but unfortunately, within high inflation, and I'm old enough to remember it, when we last had it, it becomes very, very difficult. So anytime any stock misses, or it's just punished, especially in the tech space. So what I kind of wanted to show you on that is that we've got a situation here. Let's take a look at the fundamentals on Roku, and basically what I'm talking about is fundamentals. These are the earnings, the earnings, and currently Roku does have this. It does have a price to earnings ratio of 77, which means that of course the price of the stock is 77 times higher than the earnings. So if you took the year earnings and you multiplied that, you get the stock price. The cash flow, but it does have positive cash flow, and it is a good stock, but it is getting punished. The movies and related area just isn't doing as well as it's been. And the question is it moving lower? I definitely think it is. This is a stock that possibly is, if it rallies back up to the 21-day, this is possibly a short. I mean, I know that sounds strange that you would short this, but it does appear, with earnings due basically, and it looks as if they missed their earnings big time. Oh goodness gracious, looks like they missed their earnings big time, and it is taking an absolute dumper. It's being Roku is being punished right now. This is one of the reasons why you don't want to hold in this market. If you're coming into earnings and you're not up at least 10% on the stock, Consider selling because of this. We're seeing right now with Roku, apparently they missed their number, and the stock is really taking it on the chin. I mean, these are still fantastic numbers, but it looks as if they didn't, the street didn't like it, and it is being punished. It's down 17% in the after hours trading, down to 118. Now, the question is, can you jump into this thing? Well, I'd be real careful about this. I want to see this thing strengthen. This might be a short, but right now, Roku, I just think you gotta stay out of Roku right now. It's just too tough to trade. I wouldn't even be buying puts on this right now. I wouldn't. It's just this is a tough one to trade, and it looks as if the after hours they got hurt a little bit on that. So yeah, there you go. All right. Oh, let's look at TTD. And thank you very much. TTD is an interesting company. The Trade Desk, of course, is the name of it. And what it does, of course, is it's kind of like a third source for digital ads. Google, of course, being the number one, and then Facebook. But the Trade Desk syndicates ads on a lot of other sites. So it's a very interesting company, and I think it has a tremendous future. But it has been, as of late, struggling. It's below below its pivot, which is 90, and it's currently trading at 78.85, which is off of its high. Not a lot, but it's off of its high. It does kind of appear that it is getting some support, and so let's kind of look at the chart here. It does appear it's getting support. Let's go back to the daily chart to kind of look at the action on it. Yeah, we're trading above the 200-day line. That is a good thing. That we are trading above that 200-day line. That's very positive. In general, that's very, very positive there. But it is a situation where this market is a very tough one to trade. I would wait until it moves above 80 on this one. I'd move one. Now, if you're down on this one, if you have profits on this, I'd probably start taking some profits, just because it does look like, it's holding up well, but I just think exposure in this market is really, really tough. It does look like they had some very good earnings. The earnings release, of course, were yesterday, excuse me. They were up 14%. So, you can't, it was an earnings surprise. And you know what? In a normal time, an earnings surprise on a stock like this should have absolutely made it move right away. But that's not the case right now in this strange market. It doesn't look like it's falling, but it looks like it's holding up. Here's what I would do. I probably would not increase my position in this one, even with this. But even though it is doing extremely well, this is doing extremely well. So I just, tough one to trade. I wouldn't probably go into it, but I wouldn't get rid of it either, obviously, as it's a very good stock. I mean, it's just, this market's very tough to trade right now. Let's look at Intel. That's INTC, of course, is the symbol on that one, INTC. And, Intel used to be the largest, most valuable semiconductor company in the world. I think that is now NVIDIA is now I think NVIDIA is now the number one in terms of valuation stock. Now, Intel has been sort of underperforming for quite a while, all the way back here to basically June of last year. That's when you can see what happened here. The 50-day moved to below the 200-day. That showed weakness, and again, that changed its trend. That confirmed the downward trend. It's been in a downward trend really since June of last year, if you can believe that. Current relative strength is 35. This, it's amazing that this is the case, because this company, it's a great company. I mean, it's a great company, but it's just such a tough market right now. I mean, last 2 quarters have been kind of anemic in terms of their growth. This is why it's being punished. As you'll see, that the sales were only up 5% and 3%. So the problem with Intel right now is, it just isn't growing fast enough relative to the other companies. So this is one of the reasons why the market is punishing them. I mean, the PE ratio on this is 9, which is incredible. So the question is, would you buy here? Well, if you're a value buyer, you might, but I can remember a few years ago, I was convinced that Micron, I think it had a PE of 4. I was looking at that, and I was not rewarded for that trade, even though the company was spectacular. And I think that's the same thing with Intel. It's a spectacular company, but the market wants to see more growth, and right now that's not the case. So it does look like there is a consolidation on the price, and the low of that, is going to be right about there. So let me set an alert. Actually, I want to set an alert on that because I do think that it should get support at this level, and but it again it has not been. See if I can. Yeah, there we go. I want to see what this. Yeah, so there's support on Intel, basically at about 54, and that's where that is. So it's a very tough one to trade. So 46 is the bottom of the consolidation. We're at 47. So expect to bounce on this one. Expect it to move up. I do expect this to move up in the next week, based on that. But it's just such a tough market to trade in general. So I couldn't guarantee you on anything here. It's a really, really strange market. Okay, let's look at HESM. Let's kind of look at that as well. HESM, and that is Hess. Well, this is a good one. I like Hess a lot. Hess is, if you want to be invested in the market, and you don't want to pay, you don't want to buy. I think this has more growth potential than some of the other majors like Exxon and all that. They're starting their sales numbers are starting to move very nicely. 9, 15. Right now, these kind of stocks are being rewarded in the market. This has a PE of 17, which it's amazing because we just looked at Intel and it was a 9 and it was being punished. It just has to do with where this is in the market. I mean, oil and gas, pipeline, and everything is 17 out of 197. This is one of the most favored areas in the market, and it is a consistent winner here. I mean, the funds are starting to move into it. I mean, and it looks very, very good. I mean, let's look at the checklist. I think it has 78 checklists, which is very strong. I typically like to see 68 or better. This has 78, so it's not 100%, but it's very, very good. I kind of want to look at the long term on this one to see. Yeah, we're at all-time highs. Look at that. I mean, we're going all the way back to 2017, and we're at all-time highs on this one. So, the oil patch is sort of where it's at. I mean, if you do want to expose your portfolio, this is not a bad place. So I would say if you're in this one, hold it. We're in the buy zone right now. The buy point on this one, 30.24, and we're currently at 30.33. So we are in the buy zone right now. You could buy this one right now, and I think you'd be pretty safe. You're not going to buy extended. You're not buying, too little, too late. This one looks very, very good. So Hess, everybody, HES. This is one. I know this is not going to be a super exciting stock. You're going to buy this, and it's not going to double in price in a week. No way. But if you want a foothold in the market, this is not a bad place. I kind of really, at this point, buying a Hess or buying an XLE. That's the spider. I'd probably look at the XLE, to be honest. Let's check in on the XLE today, see how it's been trading. Yeah, it's off a little bit, but it's up after hours, and this has been pretty consistent since January. The XLE has done very, very well. So my take on this one, Hess is great if you need exposure, but it's probably safer in this kind of market to go with a broad ETF like the XLE. So that's kind of where I would look to go on this trade. All right, Jesus is talking about Matador, And let's see. This is one. Um, this is what I have. I do like this one. Matador Resources, based here in Dallas, actually. This one went up to the. It moved up to the buy point, and then it retreated, and it looks like it's kind of holding right about the 21-day line. It's got a 100% checklist. This is what I like about this one. It does have a 100% checklist. So in terms of the oil and gas ones, it is definitely one of my favorite picks right now of any stock out there. Is this? But and we have some very, very nice sales increases as well. So this has a potential. Now, I probably bought it a little bit too high. I bought it on the 26th of January. So I've had this for a while, but it hasn't. I haven't gotten shaken out of it yet. I do think that we're going to see some more profits for this one, but it's a waiting game, and I wouldn't be totally heavily invested in it because just of this market condition. It's just a tough market condition right now to deal with. All right, is Tesla a buy? I don't think so, unfortunately. And part of the reason I don't is because it is flirting with the 900. It's below $900. $900 is the key level for Tesla in terms of where to buy it. It's this is kind of a. What I'm gonna do is I'm gonna kind of. I'm gonna take some of my notes off because you can see I have a lot of notes on this chart. This right here is 900. Okay, so I'm going to draw the line right across there. All right, so that's where 900 is. That's the 900 level. It has pulled below that. I still think that probably not the time to buy it. It looks like it may come down all the way to the 200-day line. I think it will definitely get support there. But right now I just don't think it's a good time to buy it. In this position, I think it's going to probably pull back to about 825, and then probably will get support there at the 200-day line. It's been, as you can see, it's just we had this beautiful move up off a 900. That was back in that was back in the third week of November, and it just shot up, but then it's given it all back. This is what they call a round trip. It's classic. I mean, we went up there beautifully up to 1200, and then and there's another buy point here at 1202 that we couldn't hang on to, and then boom, it's just been down since. So this is a round trip. You don't want a round trip, so I'd be a little bit more circumspect here, and I probably would not, buy this one right now. Not a good buy point, unfortunately. I like the stock. I don't like the buy point. So Tesla isn't a buy right now, but don't count Tesla out. It's just not a buy right now. Oops, did I get that? No, it was a Palantir. So, okay, I'll hide that. I guess no. So, anyways, Tesla is just not a buy right now. Not a buy, and so I think that's just where you got to be on it. It's so I wouldn't be buying this right now. Below, I want to see it move above 900 and get support there, because that's really where the support is about 900 for Tesla. All right. Okay, Matador. Let's see. Apple. Let's look for Jay. Let's look at Apple right now. Of course, this is the king of the big tech stocks. This is the big daddy. It's got it's got the biggest valuation out there, and it seems to be kind of there's this cup with handle formation. Let's look in on it. There's this cup with formation, cup with handle formation, and it's just come out of that. And these can be in an ascending market. This can be a very, very good place to buy. There's a buy point at 176, so we're below the buy point. I probably would not buy this unless I could see it move above about that 176 level. So I'm being negative on everything here. I hate that, but it has a good checklist. It's a great stock. It's just that right now the market is just it's punishing stuff, and it's not in it's in a good area, telecom consumer products, but and it tends to be heavily weighted, but just not and it is a cash flow machine. So that's another thing. But still, could you buy this? Well, I think I would add it here maybe, but I probably wouldn't buy it just as a first buy. I just wouldn't buy it. PLAB, PLAB. Take a look at photonics. Photonics. I remember photonics from years ago. I can remember this one. It is a blue dot, and it is earnings in 6 days. What's going on with photonics? Why is it a blue dot? A blue dot, by the way, is an indication that if you use MarketSmith, it kind of automatically scans all the stocks and it looks to see which ones, where the action is. And I want to let's go through some of them today. But it's something good is happening. Can't understand what it is, but blue dots are not bad. Let's look at some of the other blue dots to see what's going on in terms of that. So I'm going to look at the RS, and this is really this relative strength against the other stocks, which what is basically doing the best today. And I do have a few of in here that I do have. I'm kind of watching. These are the ones that are flagged here. American Financial. Let's see. Photonics, Seagate Holdings. All right. Interesting. All right. This is kind of interesting. I don't know what's going on with photonics. I can't really. I couldn't really tell you. I'm looking at the fundamentals. It's up 21% last quarter, so that's looking good. But why would it getting up today? 100% checklist. It's a good stock. This is a good stock. And we are below the buy point. The buy point on this one is 1993, and it's currently 1840. Might be a good buy at this level. It's been this company's been around. I can remember this from a long time back. It goes back a ways. Yeah, and it's sort of starting. It once it back here in 2000, it was a lot higher, and now it's starting to make its move. It looks like, and it is improving against the Nasdaq. So, interesting. I would watch this. I probably would not be a buyer on this one, but very, very interesting. PayPal. Let's look at Drunk Squidward's idea for a trade on PayPal. And if you've been with me for a while, you know that we did do a very nice. We did a bear spread on this. I would probably recommend a bear spread on this one, but here's the thing: I would be a little bit concerned. I want to see it rally for potential short. I'm looking at it. We do have some support, and this is something you have to be careful on when you are shorting. Is that we do have some support right there. So we have. It looks like about 15. Yeah, it looks like about. Yeah, I want to go back to that line of resistance. I think that it could be shorted down to about 93 from 105. So that gives us about 20. So that's not necessarily bad. It does look kind of like a lot of people are thinking the same thing, though. That's the only thing about this. You don't want to be in Captain Obvious here because that can be a problem. But it looks as if we have some support at about 93. So that might be potentially a short for PayPal, PYPL. That might be short, but I don't know. I'd be a little bit careful on that. All right, John wants to find out more about Verizon VZ, and I haven't played the telecoms a lot. This is basically, this is sort of a dividend play. It has strong cash flow, cheap price, strong cash flow. A lot of people like that. Return on equity is 30%, and the PE is 10, which is pretty good. Which is pretty good. But unfortunately, it's in a downward trend. I mean, I hate to say that. Let's look at the monthly chart. Yeah, see, it's just kind of stuck here. This is the definition of dead money. This is the definition of dead money. If you notice, it basically hasn't gone anywhere since 2000 and 2018. So if you were to invest it here, let's look at the high. If you were to invest it here, guess what? For 1, 2, 3, 4 years of holding this, you've actually lost money. So I wouldn't be in this one. This is dead money. A good company, but just dead money. So I wouldn't be interested on that one, because I want something where I have some potential, at least in the short to medium term of making some money. I don't think that's going to be the case with. I don't think that's going to be the case with Verizon, with VZ, just because if you can see, you go back 4 years, and it's a lower price than it was 4 years ago. So, not what you want to see. All right. Do you think it's a good? Do you think it's? You know what? I actually am bullish on Google. It's one of the only ones I am. I've been kind of biding my time. I've gotten, I've been buying this on pullbacks. I'll be honest with you. Now I may have the real way to make money in the stock market is to find a stock and then buy it, and to buy it for long term. Now it has. I want to show you the chart. This is the monthly chart for Google, and as we can see, I mean, it's been spectacular in terms of the way it's moved up. But as of late, it has been struggling, and it did pull all the way back down to 2,600. And now it's at 2650. So it is kind of struggling, but this might be a good time. It's at the 200-day line, a little bit below the 200-day line. This might be a good place to add. I do really truly believe, and it looks as if on the consolidation, the low point, at least in this period, was made at 2490. So 2500 seems to be a stopping point. So it seems to be support there. I think that, let's see what happens. If it pulls all the way down to 2490 and then reverses, I'd probably be a buyer. But I don't know if I'd buy it right now. I think I would wait, because 2490 is the sort of the low point for this, for these shares. So 2500 it looks like support, and you could, if you bought at that level, I think you would be a superstar, because I do believe that even with the problems in the market, that Google is so critical to the infrastructure of the internet that it probably will go higher. All right. Thoughts on Amazon. Okay, let's look at support and resistance on Amazon. That's another great stock as well, of course. Everybody knows that. I mean, I'm Captain Obvious there, but, when you can buy the great stocks, you should try. Where is support? Well, support I'm seeing on a consolidation base right now is right now on a consolidation basis, we are all the way down to the bottom of the consolidation for Amazon is 37.73. I'm sorry, excuse me, it's not 37. I always get that wrong. I always read that off wrong. The support for Amazon basically is 3,300. So is that right? No, that can't be right. Yeah, 32. No, that's not right. Yeah, no, the support. Excuse me. The support for Amazon is 2,700. That's more like it. So we are above the support, and we are above the reversal line. Boy, could you buy it there? So really, the support is 2,700. That's what I'm seeing. That's the support right here. So support for Amazon is 2,700. I don't think it's going to fall because it's in an upward trend right now, and it has moved above the reversal line. But that's sort of where the support is. Yeah. Thoughts on Amazon? 30.53. You know what? I think that resistance is No, I hate to say this. I think that support is 2,700 and resistance 3762, 3762. So that's what I think. Support at 2,700, resistance at resistance at 3762. So wow. Tough. Oils were boring today. Absolutely. Chevron moved like a slug. Well, the problem with Chevron, this is why I don't recommend the mega cap oils as much, because they just don't move. It's so huge. I mean, XOM and Chevron, these are huge companies. Let's look at CVX. That's Chevron, of course, Chevron Texaco. And it used to be called Chevron Texaco. Now it's just called Chevron. Yeah, I mean, it's a slug, but it looks like it's getting support at the 21-day line. It's up 2 cents after hours, big deal. But, there you go. All right, let's get to some of the questions from TikTok, and then we'll probably do the lightning round, and that will probably be it. How to learn trading. Well, one of the ways you can learn about trading, and I'm going to be doing some sources, some courses here. I keep saying that I'm just really behind on everything. But one of the ways is you could possibly go, and we have a Discord room, and I put training material in there all the time, and it basically is just, you just join, and it's $30 a month, but easy to find out about it. Of course, it's at www.Dallas Trading Floor, and that's a good way to go on that. So puts tomorrow on Roku, maybe that might be baby. How to learn trading for beginners. Also, you want to go to my site, and there's a link there for a book by William O'Neill. It is the best book probably ever written about trading in general, called How to Make Money in Stocks: A Winning System, Good Times or Bad. So that's, you can buy it off the site, but you can go to Amazon too. Doesn't matter. It's a great book. Just, very, very good way to go. All right. So let's look. Charge point. I think that's the last one. How many times will you tell it's hard to trade? Well, it's hard to trade in this market right now. This market has been very, very volatile. It's not hard to trade. It's easy to trade because it's easy to, but making money in this market is tough right now. Now, if we move to more of a downtrend, then it will become easier. And if we move to more of an uptrend, it'll be easier as well. Okay, let's look at, do you expect a green or red day tomorrow? I think it's going to be a red day tomorrow. Unfortunately, I think it's going to be a red day, but that's a very good observation. Well, I have come to the end here, everybody. And by the way, if you want to get on the Discord room, very easy to do. You can go to my profile up here, click on the link, and we also have the free action trade alerts as well. But we do have a special Discord service that we run. It's a great group of traders. It's definitely worth looking at. You can get that course by going to the you can get that by going to the charts on the profile and everything like that. So, well, I've come to the end here. I'm going to be trying to. I don't know if I'm going to be putting out something tonight. But if you're on the action trade alerts, of course, you will get that. Also, I just want to kind of beg you, please like this and subscribe. That would be great. It really helps me get out to people. It's very, very much appreciated. And I will be back tomorrow at about 4. I was late today. Sorry about that. Getting a new machine, and it didn't quite get it all set up properly, but who knows? We're making progress. Anyways, I will see you tomorrow at 4. Thanks, everybody. Thanks for looking. Please tell your friends about Dallas Trading Floor, and we'll be back with you tomorrow. Happy trading.